Hello, Uranium friends. We are back with episode 10 of Uranium Talk, talking all things uranium. I am Jungle Funk from the Chart Guys, joined here by Chris Red Devil. Chris, how you doing?
Joe, how are you?
I asked you first, sir.
Oh, I'm fine. How are you, buddy?
I'm doing well. It was a great week in the markets and obviously a great week in the uranium space. Super
Yeah, we saw
exciting
some
to
good volume ramp ups too.
Yeah, good volume ramp ups, obviously large percentage gains, and after kind of stalking that momentum shift for a few weeks there, it feels good to see it play out. A lot of the work in trading really is that, stalking good entries, putting together a multifaceted thesis, and we really had all of that. So it feels good to see it play out.
Yeah, I mean, we episode 8, episode 9, we were right there on these on scouting this, and it's actually playing out, which is fantastic for now.
Yeah, you love to see it, and now we move on to the next step of tracking the move, tracking the health of it, and maintaining our broader picture perspective. So before we get into all of that stuff, let's talk about the news for the week. What do we have going on
Yeah, we've
fundamentally?
we've had some, we've had again some more bullish things develop. So uh, like the strategic uranium reserve. So we know that multiple companies have gotten it, Peninsula, UEC, all those guys. So Coverdyne, which is an arm of Halliburton, by the way, Coverdyne got awarded a $14 million strategic uranium reserve from the United States government. So the U.S. government is full steam ahead with this. So they're definitely, we can't question the fact that they're trying to build a reserve, so they're going to need the uranium and they're sourcing it out. So good stuff, right?
Yeah, nice to see a big player like Halliburton have a finger in the game.
Yeah,
You
I
know,
mean, Coverdyne's an arm of theirs, but we can now say, in a sense, that Halliburton is in the uranium game.
yeah,
So
they,
we'll
they
see
got
how that plays
exposure.
out as time goes on. But for now, that's what it is, and we're going to leave it at that. The United Kingdom is now, they started a nuclear fuel fund as well, so we've got that part of it too. The EU taxonomy that we've been tracking for like 2 years or whatever, so that's now online, and it's been put in force that nuclear is ESG compliant for investment purposes in the EU. So we could see uh, the SPUT, the Uranium Physical Fund, maybe get some juice out of that. Yellow Cake Fund, which trades on the LSE, that might see some action. And if money starts flowing into Yellow Cake, the fund, that's just going to put more pressure on uranium spot price. So really good development. And let's just, add to that Kazakhstan also has their own fund as well. So we've got 3 funds out there now that are all ESG compliant, that are going to be purchasing physical uranium for their trust. So it's again a good sign. One other thing, because sometimes people have concerns about these, and let's just clear it up now. NextGen NXC filed for a $250 million shelf filing. So we've talked about shelf filings before. Most of these companies in the space have it, and it literally, all it is that they can go to market and sell shares to raise money. So almost in every sector you see, especially one that has, it's capital intensive like mining is, they're going to always need to have cash available. So does it put a large amount of pressure on the equity? I doubt it. If the equity gets a good pop, will they go to market with it to take advantage of the higher prices? I assume so. Any good CEO would do that. So you could see something going on there, but it's not like it's a huge amount of money. It's not like it's $1 billion. It's 250 million. So I mean, that is basically the news of the week. We do have one other thing, a little bit of a dynamic, and anyone who follows this space or plays this space at all, we're always watching the spot price, which is, it had a little minuscule moves this week, but it is ticking up, which is good. but also U.UN, the SPUT fund, is gotten really close to NAV. And we know that once they get to NAV or a little bit above, they can start selling some units and raising some cash. And as a matter of fact, they did that this week. I forget the exact amount. It wasn't huge, but they did. They issued some more units this week. It's a good sign because that's part of this flywheel effect that we're looking for. You know, uranium is partly a fund flow story. Sorry.
Can,
So
can, can you kind of explain for everybody what that means, getting to NAV or being above or being below, just how
well,
that
yeah,
dynamic
NAV,
plays out?
NAV being net asset value. So what is the value of the whatever amount of pounds they hold in their trust? You know, and then of course that depends on the actual spot price. So they have, in order to cover expenses and everything, normally what they try to do is they want to get 1% above net asset value, NAV. And once they do that, they can start, you know, hitting their ATM and raising cash and selling units into the trust. So we as equity investors or even SPUT investors, you know, U.UN, we want to see the NAV get as high as possible, obviously, right? So, but in the very least, we want to get that 1% above NAV so we know that they can start issuing shares and purchasing more uranium off the spot market. And when they do that, it puts pressure on the supply side,
And
and
then
that's
your
part of the
price drives
whole
up.
supply demand model.
Keep
So that's basically, in its simplest form, that's exactly what it is. And we're always watching that. Anyone who's really kind of following the space is doing so.
right on. Well, on that note of U.UN, let's just go in and look at the chart because we saw more follow through here from our 2-day trend change. So to go back out to the monthly, kind of recap how we got here. We knew we were looking for a monthly higher low because of the size of this move up, retracing more than half of this move down. And now we've got that monthly higher low, and our monthly resistance of 1794 is pretty quickly coming into play here. So let's go to the weekly. With the weekly time frame being the nested time frame within the monthly, you ultimately need a weekly trend change to be confident in the stability of this move. So we are moving up. It is a good move here, but I would anticipate that a weekly lower high compared to 1794 is still the most likely scenario. If that's not to be the most likely scenario, and we are to just go break through it, we'll likely need to see continued increasing bull volume. So we did have increasing bull volume last week and on a short week as well, which is worth noting. So we'll have to watch what we get here. And the good thing
So
is,
all you uranium investors. Sorry to interrupt you, Joe, but you
oh,
know that's what I do. All you uranium investors out there, don't flip out if we start to see a little bit of weekly consolidation. Doesn't mean that this move is dead. It's actually a healthy move for us. We have 3 or 4 weeks of green. We need to get a little consolidation there, just in order for us to keep moving up.
yeah, and that's exactly it. We talk regularly in these videos about how a healthy chart needs to see its ebbs and flows, and weekly consolidation is part of a healthy chart. That being said, the consolidation needs to remain healthy to have that still be the case. And what constitutes healthy weekly consolidation is not pulling back below the 50% retrace of the move up. So right now that'd be roughly like the 1520 area or something like that. So you don't want to pull back below 50% and you don't want to see increasing bear volume. But as long as those two things aren't happening, then that remains within the context of the healthy ebb and flow. So talking about weekly consolidation, how do we know when weekly consolidation is here? It can be as simple as just watching this stair-step pattern of a higher low every weekly candle. So that makes the key support 1575. And when we zoom into the daily time frame, with the daily being the nested time frame within the weekly, and as we said before, the weekly is the nested time frame within the monthly. So you watch this daily time frame as the guide for your weekly, and our last daily higher low is that 1575 level. So if that's lost, we'll have that weekly consolidation underway. But at this point, there's no sign of it. We saw a huge breakout on Friday across much of the sector. So bulls are in control in the short term and intermediate term. So let's go through and look at some of the rest of the sector. CCJ, really one of the stars, seeing at its peak 7.48% from low of day to high of day. So massive day there. And we'll go to the 2-day time frame because that's what we've been watching. And we were talking last week about how if we enter 2-day consolidation by losing this higher low every 2-day candle pattern, that bulls will be looking to play off of this 2122, looking for the potential of a monthly higher low. And the retrace was pretty shallow there, but boy, was the follow through good. And just kind of a general note about how it's trading is a team game. People don't view it as a team game because we obviously all have our individual accounts and we're the ones clicking the buttons and dealing with the consequences or rewards of those button clicks. But when you have a bunch of people watching the charts and working together in a community, it can really just benefit you. So just to kind of show what goes on in the chart, guys, this is a post from 9:33 a.m. on Friday morning talking about the CCJ 2-day trend change confirmed. And when we look at the chart, we'll just go into the 1 minute here and look right at it. That's right there in the morning when we broke that key resistance, rather. And obviously, best case scenario follow through. Can't anticipate or look for that every time. But
It
that's
was
why
off to the races though after that.
yeah, it really was off to the races from there.
Yeah.
So just a point of how it's there's so many charts, so many things to be keeping eyes on, and when you've got a team and a crew of people that you're working with, it allows you to capitalize on more than what you'd be able to handle as an individual. So looking at CCJ here, we are coming up into some resistances. So bulls in control, but we've got this 2474, then 2514, and highest level in a good while here is 2594. So I'm just going to continue to use this 2-day chart because it has been where the clarity is. And a lot of people be like, well, why are you using the 2-day or something like that? It is a bit more obscure of a time frame, but really the reason we use these different time frames is ultimately just to find clarity on the charts. So we do have a clear 2-day uptrend now, and as long as that is intact, then bulls are maintaining control here.
You know,
So
and another thing that you can see on this chart, I mean, that what's your red line? Is that your 26 EMA?
that is the 26, yes.
Yeah, so we can see that for quite some time, the 26 EMA has been a little bit of a metric for resistance and pullback, and it's convincingly got through that as well.
Yeah, certainly through that convincingly. So we'll just have to watch and see how long bulls can keep this show on the road. And remembering that ultimately we are looking for this monthly higher low. And big time bull day on Friday, but we still don't even have that monthly higher low set. So that
Yeah,
is
we
the
got to take out those.
24.
We got to take out those last two monthly highs. Would
Yeah,
be nice.
we really do need to just bust them all out to be confident in upside. We would be set if we get through 2474, but you want to take out those additional levels just behind to be fully confident in that. So from here, bulls will certainly be looking for an hourly higher low. We got a little bit of hourly consolidation underway into the end of the day on Friday. And the best look for bulls would be to hold this hourly 12 EMA. So after a big move like this, bulls are scouting back burner trades. And if you are not familiar with the concept, if you go on YouTube and type in TCG back burner, there's a video breaking down the strategy. And essentially, in a strong daily move up, you'll want to see 5-minute oversold conditions marking your hourly higher lows. So bulls will be watching for that heading into next week. And right now, 5-minute oversold aligns right around with this hourly 12 EMA. And there's an indicator called RSI levels by Abdomi, not quite sure, but that's on TradingView. And that allows you to project out your oversold levels. It prints this line here, and that just allows you to roughly estimate where 5-minute oversold would be. So right now that's at 24.04. If we go back to our hourly, that's hourly 12 EMA is sitting right around 24.02. So nice confluence there for the aggressive bulls trying to look for day trade or continuation. And if we lose this hourly 12 EMA, we'd go down to the 4-hour 12 EMA. And typically in stocks, it's more so the hourly 12 EMA that is providing support. And by stocks, I mean names trading 6.5 hours a day. Whereas like crypto or commodities futures, you kind of lean more on your 4-hour. But uranium, time and time again, shows that it likes to ride these 4-hour 12 EMAs. So I'm going to be using the 4-hour 12 EMA as the guide personally for the strength on this daily and 2-day move up.
Yeah, I'll probably be grabbing some CCJ if it taps that 1 hour 12.
Yeah, it's definitely
I mean, I'm in position already. I have a core, and I day trade CCJ a lot, as you know, Joe. But if I see a 12-hour, a 1 hour 12 EMA tap, I'll probably throw in a position for a swing if it holds. If it doesn't hold, I'm gonna be out, and I'll just be still riding my course.
That sounds like a good plan, because if it does hold, that would be a sign of eager bulls looking to buy the dip, and that would be a clear sign of health on this move up. So we'll be watching how 5-minute oversold responds across the sector. And if we just bog down right through it and get into like the teens on the 5-minute RSI or something, that's a little bit of a short-term red flag and would tell us that perhaps we have some daily consolidation quickly shaping on up.
Yeah, we'll have to reassess the action there at that point, you know?
Yeah, absolutely. So because there
The
is
key thing
a
for me is that, we get some continuation and the volume stays elevated like it is now, comparatively speaking to the most recent, couple of weeks. That's what's important at the moment for sure.
yeah, that's I agree with that. And if that's the case, then we'll likely have our URA SPY ratio continuing to move on up. And as we talk about this every week with the monthly equilibrium on this URA SPY ratio, we were scouting this monthly higher low, and now we've got it set. So what we have to watch out for now is that, are we going to set a monthly lower high here on this bounce? And that would be the most likely scenario because of the depth of this retrace here. So we'll need to track this, because when that monthly lower high is set, we'll have relative weakness coming into the uranium space. And we'll have to watch out for that. So to kind of talk about how this or why this ratio is important, we had a really great example, and we can go back to CCJ for this. We'll go to the daily. And if we look at this daily candle on Thursday, nice green day for CCJ and for the uranium space. And if we go look at the S&P 500, that was a solid red day there. And that's the beauty of these ratios, is when you can get positioned in a name that has favorable backing from the ratio chart, then even if the broad market is not cooperating, you can still come out on top. So that's why we lean into these ratios. That's why we follow these ratios. That's why we look for these longer term bottoms like we had been stalking here, because once you see these move up, it's a lot easier sledding on the names that you are playing. So we'll be watching this ratio, and right now we've got clear daily 12 EMA support. We were watching the 2-day on the way down because we had clear 2-day 12 EMA resistance. Then we got over. That was the beginning of the momentum shift. But now we'll just seek clarity where it's at. And we've got this nice daily uptrend with daily 12 EMA support. And if that's lost, we'll know we've got a little bit of a shift going on here back to the bears. But until then, bulls are large and in charge. All right, we're talking long. We're already at 19 minutes, so we'll try to keep the show on the road. But there's a lot to talk about.
We are talking long?
You know. There's just a lot to talk about, so we'll
Well,
take the
there
time. If
is.
it ends up
There
being
is,
30
sir.
minutes, then it's 30
Understood.
minutes.
Understood.
So UEC, obviously one of our stronger names off of the lows, and we'll go to the 2-day because that's what we've been watching for clarity across the sector. And we got bulls looking like they're shaping up this 2-day higher low right back here at resistance of 394. And if they get through that, we're just looking at 394 again. That's a double top there. And then after that, the next clear level would be 420. And just have to be mindful that we do have this monthly tightening range. So if we get above that 394, got to be careful of a lower high compared to 465. And if that breaks, then that's a huge win for the bulls. And
Just a note on UEC, by the way. They're in the top 5 holdings in XME now. So XME may have added to their position. That could have been part of that whole volume ramp as well on that last Friday.
It wouldn't also wouldn't be surprising if that was part of the volume there before earnings, because that was the an after hour.
It came out like a
something.
day or two after, so yeah, it could have been somewhere in there. So, but it's just good to know, which could say to yourself, if you're trading UEC, keep an eye on XME because it's one of the top holdings now. So
yeah, going to certainly be correlated there. So we'll have to keep eyes here on this 356 low down here now at this point, because when we go to the weekly, we know that it wouldn't be surprising to see some more thorough weekly consolidation after this move off the low. So it's kind of on the note of how we were stalking the bottom when the charts were bearish, but that's when you're stalking to look for the move up. And now that we have the bullish charts, you kind of got to take off your bull goggles and put on your bear goggles and make sure that you're staying one step ahead of the game. So
yeah, the question becomes, is it truly time to be looking bear right now? Because maybe this move is just getting started. And anybody seasoned enough in the uranium space knows you see these big bars come out of nowhere, right? And they, sometimes they see continuation, but sometimes they don't. And we'll talk about it when I go over the URNM trade.
yeah, and really the nice thing is you don't have to predict anything because we have levels to work off of. And now we know that if bulls are above 356, then they're in full control on this move. If they lose 356, probably have some consolidation shaping up. And then next week, maybe we'll have a new line in the sand to be working off of. If we see some daily consolidation and set a new level at 375, then that's the line in the sand. And you can just keep walking that up. And then when that's broken, you got a little bit of a momentum shift. So let's see, what else we got? NXE. So NXE, we'll go to the 2-day here. We were talking about needing this 2-day trend change. We got our consolidation. We got a big move off the low. And resistance here is 456. And then we've got our monthly double top up at 485. Which if it breaks here, we would be regaining the monthly uptrend after confirming a monthly downtrend back here in the beginning of 2022. So that would be notable, but something we've got to keep an eye on. As we were talking, I think it was a few weeks ago now at this point, watching the NXE URA ratio chart, because we got a nice monthly EQ here. And we were watching out for the monthly lower high, and now that is set. So we'll have to see how much consolidation we get here, because after being one of our stronger names over a couple months there's potential that NXE would be one of our weaker miners here. So we'll keep an eye on that. And you can see that bulls tried to move up to see continuation, but then really this past week kind of came undone there. So in terms of that, of relative strength, relative weakness, there's potential for UUUU to be a laggard. It's certainly the weakest of the major miners at this point. We've got clear resistance at 647. If we break above that, we'll be joining everybody else and getting a trend change back to the bulls here. And what UUUU bulls want to see to be confident in it being a laggard is this ratio chart needs to come along. We've got clear 2-day 12 EMA resistance. They'll need to get up and over that if they want to say, okay, the laggard game is on here for UUUU. And
So I called this out a couple of days last week in the room that UUUU was the laggard. Anybody who feels like they missed this particular move across the space, the spot you should be looking at is UUUU if things are continuing, right? So you
yeah,
might be able to capture some of those quote unquote FOMO lost gains through UUUU. Because if it's a laggard and this move keeps going, UUU, I can't predict it, but I'm going to be looking at it as the catch up play.
yeah, I'm right there with you. And the setup is nice and clear on the ratio chart. It's nice and clear on the regular chart here with resistance again at 647. So we will have to see what we get. And essentially, we are seeing a similar laggard action play out on CCJ. And you can see the ratio chart getting up and over, breaking through resistance. And obviously, CCJ was one of our strongest names there on Friday. So clear resistance for a long time. You get up and over, you fish the low, and you get the trend change. And that's essentially what we'll be looking for on UUUU eventually. Perhaps it plays out, perhaps it doesn't. We'll have to stay tuned. All right. I think that's pretty much it. Let's talk about the broad market because this is very important here because even though we've got the favorable URA SPY ratio, you want to see the broad market going up if you're playing something bullish. It's as simple as that. And we were talking 2 weeks ago about the potential that we get a 2-day or 2-week higher low on the S&P 500. And part of the reason we were so on top of that was this bear break here without follow through. So this was on a Thursday, and this was the Friday before we recorded that episode and kind of posited that, all right, we're cautiously bullish the S&P 500 here because of this bear break. And here we are now getting through resistance. Obviously going to need to see more follow through, but it's kind of a good lesson on a couple things of one, your bear breaks without follow through telling you to look up, your bull breaks without follow through telling you to look down, and two, just to keep an open mind in trading because after this week following the CPI and FOMC reactions, everybody and their brother is very bearish on the market, and including us on this move down. We were very bearish, and we said if we get this daily downtrend, it's going to mean go time for the bears. But when that lack of follow through happened, we stayed nimble, we flipped the ship around, and that was a decent portion of our uranium thesis for hunting these recent lows. So right now, it's feeling good. It's playing out proper. We'll have to see what kind of follow through we get. But uranium bulls obviously want to see that follow through take place. I know we're going long, so we won't get too into it, but I won't even pull up the chart. QQQ, tech sector, huge portion of the S&P 500. It's right up against resistance right now. So, it might sound odd that uranium bulls want to see QQQ, the tech sector, break to the upside, but that's how the game works. And the broad market in general is going to need to see QQQ break that resistance to be confident there.
We want everything to be bullish. We want the bull bonanza.
Yeah, if we want the bull bonanza, we need to see everybody bullish. And that includes XLE. And bulls had a heck of a save here on XLE because,
yeah, baby,
as we were talking about, red flags of when you break resistance and you don't see follow through, that means look the other way. Well, that's what we got here on XLE, but bulls defended support with a vengeance and then got back up through resistance. Again, not a lot of follow through, so we got to keep an eye on that. But as long as this chart hangs on, then that's a weight that the uranium sector wouldn't have to worry about necessarily.
Yes, and my DVN position thanks this XLE move as well.
Yeah, Chris, for folks that don't know, he is a menace scalping and trading DVN as it's his favorite day trade position. So
no question.
I believe that is that. Chris, you want to fill us in on your URNM trade
Yeah,
that you
give me the
slayed from
screen.
last video?
Give me the screen, you pig.
You You're live. You're on the main stage, sir.
Thank you, buddy. So, listen, we were talking about this URNM trade, and I've detailed it in multiple videos, even on my own and in this. So, yeah, I did take that half a position. I'm don't quote me, but I think I was 31.47 might have been my actual entry there. So, and now again, I was looking at this target of this $34 range. Okay. And, what's the basis of it? Well, look, I got this 200-day moving average. I've got this resistance zone right here. So, I wasn't really expecting to see this with this volume ramp up. And it's a good sign. And the whole space is moving. It's not just, we're all moving in unison together. So I want to see how it handles this resistance zone, because there's a confluence here that it could reject here, no doubt. But again, I'm in a half position, so um we'll see how the week goes. I might actually end up selling some calls on this half position, as opposed, or maybe trimming a little bit of it and selling calls on the other one. So we'll see how it plays. Good volume, good move through this, all these moving averages, which I love to see that. I love when they stack up like this, and then you get through and they start to use them as support. But we can see multiple times that that same dynamic didn't play out, and they didn't really hold them as support, and they became resistance again. So is this yet another little fakey breaky? Time will tell. But that's where I am on this trade. I'm still in this half position. I hold cores. This is a trading position, and we'll see how it plays out. I do keep an eye on the ASX names and the smaller explorers and whatnot, because they do have, URNM has all those guys in there. So if they're moving too, I'm going to be less inclined to just be chopping away, and maybe I'll just be trailing my stop by maybe like I don't know, 5 or 8%. We'll see how it plays out. I need to see how the action is this week. We're coming into this resistance. I suspect I'll have an answer by Monday or Tuesday. And that's it for me, buddy.
Man, that was a nice trade. The way you went about it of like, well, maybe we just go from here. So I'm going to take a half position, and I'll keep half the risk for if we do pull back. It's the perfect example of why deploying that strategy is a good one, because then you really do get the best of both worlds. If it goes up from there, you're happy you got a half position. If it pulls back, you're happy that you only entered half a position.
Yeah, and
And
don't forget, we had this falling wedge. We had this little bit of this inverse head and shoulders. So there was things that lined up that made me want to really start looking at it, and that's why I did the half position. So it's really just, and look at this resistance, where look how it lines up with this 200 DMA. So I mean, it's not going to be surprising if we get a rejection here, or a little bit of an overshoot, and then maybe a pullback into some daily consolidation. And I wouldn't mind that at all, you know?
yeah, it's healthy. Like, if you want to see bigger picture continuation, you need to not get too extended on the shorter term timeframes. Like, saying that uranium does kind of have a history of just freaking moonshotting on the
Just
daily,
running
but
away. But look, I mean, you pull up this hourly chart, and it's hot coming into that. So would it be reasonable to say that Monday you kind of see some hourly consolidation into this 12 EMA, perhaps? Yeah, and that would be perfectly fine and perfectly healthy. You almost want to actually see that.
you do. You
This
you
could,
legitimately do.
yeah, this could be the spot where someone who missed this move could say, okay, I've got a little level to work off of, maybe Friday's low, or yeah, Friday's low or something, and say, all right, let me take this 12 hourly 12 EMA. Maybe I might even decide to add my other half there. We'll see. We'll see how the actions. But
Yeah.
for me, Joe, I'm good here. I think it's time for us to sign off.
Yeah, just real quick, let's sum up a few things.
Okay.
So bulls want to see the broad market see follow through on the setting of this 2 week higher low. They want to see hourly and 4 hour EMAs remain intact for the daily move to be healthy. When those are lost, we want to see our 2 day uptrends remain intact. And then when those are lost, we know that maybe this bull move up is over for the time being because we can't forget that we are in tightening ranges on all of these charts still. And this move up was us holding support and keeping the larger time frame structure healthy. So it's feels easy, or when you get moves like this, you want to get your spacesuit on and get ready for the moon, but we got to just keep that perspective in check here. So that being said, we don't even have our monthly high or low set here on CCJ yet, so there certainly could be a good bit of runway left, but now that we've got some temporary bottoms in, got to keep an eye on the potential bear angle of things. So the fun sponges come out, but that's good. It's good to keep things in
We
check.
get like 1 or 2 day. We get like 1 or 2 day moves with this guy, and he's already looking the other way.
I'm not even to be clear. I'm not looking the other way in terms of any trading or anything like that. Just painting the scene for it because we are ultimately just range bound. Once you get the bottom, you just got to start angling the potential for the opposite. So
Hey, Joe. Over and out.
over and out. That's all we got, everybody. Thanks for listening. On this note, about half of our viewers are not subs to the channel. So if you're watching the content, you're liking the content, you want more of the content, go ahead and toss a sub and a thumbs up to the chart guys. Dan puts out a ton of awesome content every day. And that's that. So over and out. Have
See
a
ya.
great week, everybody.